We have learned a lot about rules of debit and credit, identifying accounting heads, relating those accounting heads to the relevant main head, identifying the nature of the main head, then to recognize debit accounting head and credit accounting head based on increase or decrease in the main head. So all these things, yes, we have also learned compound entry. So all these learnings, in fact, need practice. So what we are going to do now is practice. So let's practice this journalizing thing. So prepare a journal for the following transaction in which we have capital introduced in business, rupees 10,000 in cash and 20,000 as machinery. Purchase land for cash, 4,000. Purchase goods for cash, 2,000. And on credit from Giant Store. Okay, I'll not read it. I will not read all these transactions. Rather, what I'll do, I'll read one transaction and then I'll discuss that transaction in the answer. I trust it would be a good practice. Well, come on. Capital introduced in the business. Amount is 10,000 in cash and 20,000 as machinery. Yes, it is a compound entry that we will be recording with this transaction. Why? What do we see? That there is capital account which belongs to owner's equity, and the main head of owner's equity is credit. Okay, then there is cash. Cash is asset and main head of cash is asset and group is debit. Then comes machinery. Its main head is asset and group is debit. Okay, now let's see. When this transaction is happening, cash is causing an increase in assets. Machine is also causing an increase in assets of the business. Remember, assets of the business are increasing because business is receiving capital from its owner. And because of which, owner's equity is also increasing. So increase in owner's equity being credit, increase credit. Debit nature, when increase, it would be debited. And again, debit nature, when it would be increased, it would be debited. So let's see. Yes. Cash, debit with 10,000. Machinery, debit with 20,000. And capital, credit with 30,000. So the important thing that I told you, that in compound entry, both sides should give you equal balance. Sum of debit should be equal to sum of credit. And the narration is that cash and machinery introduced into the business as capital. Okay, or simply as capital, you can see. Narration is something which is very simple. Don't confuse on this narration thing. And here we have to put date. Well, then comes, we purchased land. We purchased land for cash. So one accounting head is cash and the second accounting head is land. And both accounting heads belong to the main head asset and their nature is debit. But one accounting head, which is cash, is decreasing, and the other accounting head, which is land, is increasing. So when there is increase in debit, would be debited, and when there is decrease in debit, would be credited. Let's see. Yes. Land and cash. Land being debit is put first, and cash being credit is put under the land, under the debit accounting head, and its amount will be put in the right side, in the credit side. Okay. Well, next comes purchased. I trust you are not boring. Huh? Okay. Please be attentive. And it's better if you keep writing on your writing pad while looking into the screen. So you should be very smart. Okay. Well, purchase goods for cash. We have purchased goods for cash. And we know when we purchase goods, the accounting head purchases is taken. And on credit as well. And on credit as well from Mian store. So again, it's a compound entry. Why? Because we are having purchases. Let me write here. Purchases. We are having cash. And against purchases, when there is credit transaction, we have creditors with us. Okay. So purchase is an expense. Cash is an asset. Okay. I'm slow. I'm not fast. Okay. So please be with me. Okay. Please be with me. I repeat. Purchase is an expense. Cash. This is cash accounting head. This is purchase accounting head. And Mian store is our creditor. And creditor is our liability. Okay. I'm not that fast now. Okay. Good. Good. Appreciate that you are understanding. Well, so purchase expense is of debit nature. Cash asset is also of debit nature. This is nature. I'm just encircling it. And liability is of credit nature. Now see, expenses are increasing. Cash is decreasing. And creditors are increasing. Okay. Well, when debit increases, we do debit. When debit decreases, we do credit. And when credit increases, we do credit. Okay. Now, let's see. Keep this thing in your mind. And I'm going to the next slide. And here we see that purchases is debit. And cash and creditors, Mian store is credit. Again, since it was a combined entry, so sum of these two is equal. One thing what is coming in your mind, I can read your mind as well. Huh? Don't you feel that I can read your mind? Yes, I can read your mind. You are thinking that what if we pass two separate accounting entries for this? Okay, let's pass two separate accounting entries. Purchases and cash, one, and the second one is purchases and creditor. Okay. So purchase is an expense, debit group. Cash is an asset, debit group. Purchase is an expense, debit group. And creditor is a liability, credit group. Now analyze these two separately. This one separately and this one separately. Okay. So purchases are increasing, so debit. Cash debit is decreasing, so credit. So this is one accounting entry. I have told you that in each accounting entry there would be one debit and one credit. As to the amount, both debit and credit should be equal. Okay. And here purchases increase, debit, and this creditor's liability is also increasing, so credit. So one debit and one credit. Now what we will do, since this is common accounting head, we will combine this purchase together, and combined accounting entry, or what we say compound accounting entry, would be purchases account debit with its total 9,000. Okay, here we go. And cash is being credited with 2,000 and creditors with 7,000. I trust it's a good revision as well, okay, of all the concepts that we have learnt in our previous modules. But please be attentive, Don't be overconfident, okay? Well, let's see the next transaction. You will process it in your mind, okay? Well, and remember, I can read your mind. Okay. Sold goods for cash. Yes, there is sales and there is cash. Cash is asset. Well, very good. And asset is debit group and sales is income. Excellent. I can hear you as well. Okay. So, cash is increasing, income is also increasing. Debit and credit. Great. Oh, well done. So, here we go. Cash is debit in the debit column and sales is credit put in the credit column. Okay. Well, then comes rent. Oh, yes, come here. Rent. Okay. Number 5. Yes. We have paid cash for rent. Okay. So we have paid cash for rent. Cash is asset of debit nature. Cash is decreasing, therefore it should be credited. Rent is expense of debit nature. Expense is increasing, therefore it should be debited. Let me tell you here one interesting thing. Very interesting thing. Supposedly, okay, let me rub it first. Okay, supposedly, if you are confident that cash is credit because we have paid cash, you are confident that cash is an asset and whenever we pay cash, it is always credited. So don't process for other, just debit this thing. Because if one accounting head you are confirmed that is credit, the other accounting head would always be debit, that cannot be credited once again. Okay, so it is a tip. Okay, well, good tip. Okay, well, this is what we discussed over here, that rent is debit and cash is credit. Okay, next is owner withdrew cash for personal use 500 and paid 500 to owner for personal use. Both of these two are the same thing. Okay, either you will see it's written that owner withdrew cash for personal use or paid 500 to owner for his personal use. Both are the same thing. Okay, let's analyze. Okay, this is the same. Either we write in this way or that way. So whenever, look, let's analyze this one, okay? Only this one. Owner withdrew cash. Cash is being paid to owner. So cash, when it is paid, there is decrease in asset debit group. Therefore, we have to credit. And when owner withdraw, the second head is drawing. And remember that drawing is in fact belongs to capital, or you can say owner's equity. Let's write owner's equity in this way. And its nature is credit, and drawings cause, don't confuse, okay, and drawings cause decrease in owner's equity. Nature is credit, it is decreasing owner's equity, therefore should be debited. Okay, but one thing that I told you as a tip, now I will exercise that tip. Let's exercise that tip. What's that? We have paid 500. What we have paid? Obviously we have paid cash. And we know very well that whenever cash is paid, we have to credit the cash. No, I'm doing directly. So the other accounting head we have identified that is drawing. So this drawing should always be debited. Look, it will save your time. Okay, good. So here we go. Drawing debit with 500 and cash credit with 500. Okay. Now I will repeat this shortcut method for the next transaction, which is salaries paid in cash. Okay. Assume, not assume, just be confirm and confident that cash is credit. Okay. Why? Because we are paying cash. Okay. So what we have skipped? We have skipped that cash is an asset and belongs to debit group. So these are two things. And third thing is there is decrease in asset because of this transaction. These three exercises we have omitted. Directly what we are doing now, that cash is credit. Why? Because we have practiced it so many times that whenever cash is paid, there is decrease in asset and then we have to credit cash. Okay. So obviously the second thing is salaries. Obviously that would be debited. Okay. Good tip. Good tip. Well, so salaries, debit and cash credit. Great. Okay. 2 transactions, 3 transactions left only. Be patient. Okay. What is this? Bought goods from Moonlight. Bought goods from Moonlight on credit. It's a credit transaction. Bought goods gives you purchases and Moonlight is our creditor. Whenever we purchase goods on credit, creditors do create. Well, so this is purchases debit and creditors credit for this amount. Okay, let's concentrate on this transaction. Sold goods on credit to Falcon for 8,000 and for cash. Again, there are 2 accounting entries in this. Okay, let me go straight to the answer. Here, what do you see? That we have sales on cash as well as we have sales on credit. For credit, debtors debit, and for cash, cash debit and sales credit. Okay, I trust you can understand very well this compound entry now. Okay, but remember that sum of debit is equal to sum of credit. Okay, and the last transaction of this practice is that we receive cash from Falcon 2,500 on his account. So receiving cash is debit because it is increasing asset. Okay, so just see cash debit with 2,500 and debtors Falcon account would be credited with 2,500. That's very good. So let's remember important tips that it is not compulsory to write account all the time. Okay, you can simply write debtor debit or cash debit or sales credit or purchase debit. Okay, and the second thing is you can abbreviate account with A/C or capital A/C, and then identify the name of debtor and creditor in journal entry. This is something very important, that you should identify that who is the debtor and who is the creditor. Thank you very much.